Next, we're going to dive straight into the questions. Once again, we're going to skip the questions that are related to the past chapters. If you guys are still confused on the topics, I do highly suggest that you do go back and go over those topics again. This is very important because accounting is like building a house. You can't start from the middle. You have to lay the foundations first and work your way up. That's the same thing with going through the chapter. So that's very important. So we're going to start off our discussion with PQ3-2. So even though critical and enhancing questions are given to us in this course, like I said before, we're going to ignore those. We're going to approach it in a different way where we're going to think about it logically. And now, instead of just recording it under assets, liability, or equity, we're going to actually figure out what the actual account names are and place it within that part now. So let's get started. PQ3-2. You started a consulting business on May 1st, 20XX, and had the below noted transactions during the month. Analyze the transactions using the critical and enhancing questions. Once again, we're going to ignore that. And record the business activities using the expanded accounting equation and the account names. That's the main focus now, the account names. The chart is provided on the next page. I prepared the chart for you guys in Excel. So once again, we're going to skip the critical and enhancing questions just because I feel like students are forced to memorize those and they're not really understanding the actual material at hand. That's why I told my students to start ignoring those. So let's dive right into it. So the owner invests $2,500 of cash into a business. So the first question you're going to ask yourself is cash. Is cash an asset, liability, equity, revenue, or expense? Cash is an asset because it provides us with a future benefit. The first account we're going to have here is going to be cash. So cash is going to go up by $2,500. And as a result, the owner invested into the business. Remember, whenever the owner invests something into the business, that's always owner's capital. So that's going to also go up by $2,500. Now, transaction number 2, we borrowed $2,500 from your parents. The loan must be repaid by July 1st, 20XX. So once again, when we borrow something, we're borrowing cash. So once again, cash is going to go up by $2,500. Cash is an asset. And in this case now, this gives rise to a loan payable. So now we're borrowing money from our parents. That's a liability because that is a future obligation. And remember, we don't have to memorize these accounts. It fully tells us it's a loan. And we know that whenever we borrow something, it's going to be a payable. So loan payable, $2,500. Number 3 is registered a business name with Service Ontario. $60 using a credit card. You will pay off the credit card at the end of the month. So the first thing so you don't always have to do the first part of the transaction first. If you know right away the credit card is a liability, let's get that out of the way first. Why not? So credit card, the account that's going to be used for credit card is going to be accounts payable. Let's set that up over here. And for transaction number 3, we know that credit card or accounts payable, the liability is increasing. So we're just going to update it right away. Now we know that a business name is considered to be a business license. So we're going to set up a new account under assets for business license. Remember, business license is an intangible asset that provides us with a future benefit. So let me retype this out, business license. And that's also going to go up by $60. So next transaction, purchase office supplies. It tells you the account name in the transaction sometimes. Once again, you don't have to memorize it. Just read the transaction and analyze it. So office supplies, we know it's an asset because it's a future benefit. So we're going to set up a new account called office supplies. And this is $480 plus. And this is $480 plus HST using a credit card. Remember, The formula to calculate the cost after HST, so after tax, the formula is going to be the before tax amount times 1 plus the tax rate. We know the tax rate is 13%. So in this case, it's going to be 480 times 1 plus 0.13. And that's going to give us, my mistake. So 480 times 1 plus 0.13. That's going to give us $542.40. So we know right away credit card is accounts payable. It's increasing by this amount. And now office supplies is also going to increase by that same amount. Now transaction number 5, we paid cash. So automatically, we know cash is an asset and it's going to be decreased. So we've already analyzed that before even reading on to the rest of the question. So we pay cash for $500. Sorry, we pay cash for 500 business cards from Staples for $65 plus HST. So once again, we're going to run a simple formula. Simple calculation, 65 times 1 plus the tax rate, 13%. So in this case, cash is going to be reduced by 73.45. However, office supplies is going to be increased by this amount, because business cards is going to fall under the office supplies account category. Number 6, receive cash from customers for consulting services provided, $730. We received cash, it tells you. So cash, asset, here you go, just type it in or just write it down, $730. And now we know that we performed a service. Because remember, you started a consulting business. Our main business is consulting, it's a service. So our service revenue is also going to go up by $730. Transaction number 7, we attended a one-day conference to network. So that right there is the cost of doing business. We paid the conference fee of $450 plus HST using your credit card. So we incurred an expense to help us earn revenues. Simple as that. So that's the definition of an expense. So in this case, once again, we're going to do a simple calculation. Derive at it plus HST. 450 times 1 plus 0.13. That's 508.5. And we paid using our credit card. And now we're going to set up an expense called conference expense. And this is also going to increase by 508.50. Now we used up half of the business cards during the conference. So out of these 500 business cards in transaction number 5, so in this case, it's relating to a prior transaction. So I highly suggest you go back to this transaction, read it, and just quickly redo it or go over it again. So we paid cash for 500 business cards from Staples for $65 plus HST. We did the calculation over here. And then for number 5, we decreased cash and increased office supplies. Now, half of these supplies are used up for this specific amount because half the business cards are gone. So we're going to actually reduce our office supplies by half because now the future benefit is gone. Remember that. We used it up. When we use something up or consume something, that gives rise to an expense. So now we're going to increase office supplies expense by that same amount. We're going to increase it because our expense is increasing. Number 9, at the end of the month, you had $411.72 of office supplies remaining. So once again, we're going to go back to how much we spent on office supplies. So purchase office supplies for $480 plus HST using a credit card. So we calculated that this over here. So out of this amount, we used up, so let's actually rewind. So we have total office supplies of this amount. And at the year end count, we had office supplies remaining of 411.72. That means we must have used up the difference, right? We used up the difference, which gives rise to an expense. So simply put, office supplies is going to be reduced by this amount, and now our expense is going to increase by this amount. So now the last transaction, paid off your credit card for all business expenses using cash. So now we're going to add up our entire credit card bill. So we spent $60 in transaction number 3. Register a business name with Service Ontario using a credit card. We spent $542.40 in transaction number 4. Purchase office supplies using a credit card. And in transaction number 7, we spent $508.50 using a credit card. So they're saying we're going to pay this off in full now. So we're going to add all these together, 60 plus the $542.40 plus the $508.50. And we're going to subtract that now. So that's the amount that we're paying in full. So our future obligation is now decreasing because we're paying it off. We're fulfilling the obligation. And it fully tells us in the question we're paying it off with cash. So cash is also going to be decreased by that same amount. Now to calculate the balance in each account, we're going to simply do simple math. So 2,500 plus 2,500 plus negative 73.45 plus 730 plus negative 1,110 and 90 cents. Now to calculate the total, we're going to do a simple calculation. 2,500 plus 2,500 plus negative 73.45 plus 730 plus negative 1,110 and 90 cents is going to give us our total balance for cash of 4,545.65. We're going to do that for each one. So I'm going to put it in a simple formula. So I want you guys to calculate this on your own and just double check with my numbers. I'm going to run this formula all the way across. There you go, perfect.